Greetings, ladies and gentlemen, and welcome to Dad's DeFi Space. My name is Kevin, and I'm actually so grateful you have taken a moment out of your day to spend it with me. Before we go any farther, I got to apologize. We already recorded one stream, 40 minutes worth, and the audio was absolutely terrible. I had the music up too loud, so we are going to re record. So, right now in the markets, we are sitting at extreme fear. Bitcoin is actually down 45% from the highs. Now, what's absolutely crazy about all of this is Bitcoin. Hold on one second. It's all messed up. Oh, well, that's okay. Right now, Bitcoin is down over 45% from the highs. Altcoins are bleeding, leverage was wiped out. And look, we are going to talk about this in a minute, but institutions, some of them are still quietly positioned. BlackRock. And the question right now isn't, is this bad? But the question is, are we actually forming a structural bottom right now? Or are we setting up for that final leg down? Now, I don't know, but I do know we're going to make our way down and touch that 200 week sometime this year. And we'll talk about that in a little bit too. So, look, this week, the big catalyst is not crypto native. The big catalyst this week is macro. Kevin Warsh is being nominated by President Donald Trump to be the Fed chair. And expectations immediately thought hawk, 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 and risk assets sold off. That's trade TradFi, not crypto, not performing. Now, also on top of that, we got a stronger than expected jobs report. Maybe they don't need to lower interest rates so fast anymore. What's the result? Look, Treasury yields moved up, liquidity expectations tightened, and this risk assets sold off. And it looks like this. Yeah. Look at your altcoins on the monthly, and it hurts. So I feel your pain. And in crypto, whether you like it or not, crypto is extremely liquidity sensitive, right? So Bitcoin isn't looking much stronger than aughts at this point. But what's going to happen? So in this live stream today, we're going to actually take a look at the news and events, Bitcoin, ETH, and a few altcoins. And we're going to talk about what's next. Is this the bottom? Was 59K the bottom? Or are we going to go lower? And then what is next for crypto? Okay. Now, hold on one second because I do want to share this out on X and stuff before we go any farther. All right, hold on one second. I'm almost there. Oh, we at least got it out on X. That was a mess. And I apologize for that, but I didn't realize how bad the audio was at all. And then we're going to send one more out and then we'll get started. All right. Think we've gotten to it. So the first thing I wanted to talk about before we get into the Actually, let's go ahead and talk about Bitcoin. So we're going to pull up the Bitcoin chart. Bitcoin has been hovering right around $63,000, or excuse me, 63K to say 69K. Actually, we've been getting rejected around 68, 69K. And look, this is not just a number. 63 to 65K is a major cost basis cluster, especially for Bitcoin ETFs. This is where many of the ETF buyers were positioning and buying up spot. So it should be where structural demand should show up. And if it holds, might get a short squeeze. And the alts will probably pump with that short squeeze. So that's what we're hoping for. But if we break 83K with any kind of volume, the 200 week is going to become a magnet. Okay. So taking a look at Bitcoin real fast, and we're looking at the daily chart. We broke below the tariff lows back on February 4th. And since then, we went all the way down to $60,000 earlier today. So we have tapped into the bottom of the range again, right? We tapped here, and now we've tapped here, all right? $63,000, which is crazy, right? Now, let's take a break, and I want to educate the masses. So we're going to talk a little bit about the moving averages, and I want to throw a couple of them on the chart. First, we're going to start with the bull market support band. And we're also going to take a look at the moving averages. Oh, not the EMAs. I don't want the EMAs. Hold on one second. How does this work? What other indicators are on? Excuse me. I didn't even know what indicator was on there. All right. Bull market support band. And then we're going to put in the. There we go. This will be perfect. The 50, 100, and 200. There you go. Love it. Love it. Love it. All right. So it's not right. Yeah, I don't want this one. Hold on one second. I'm going to just put this one on. We'll be missing the 100. All right. Boom, boom, boom. So what you're looking at here, all the different moving averages in the chart. Now, really to get this the best, you need to go on the weekly. And as you notice, we have almost tapped into the 200, which is sitting at 58K. We have broken below the 100, which is way up here around 87. We broke the 50 a long time ago, which was sitting at 98.99 right now. And then the bull market support band was broken way back up here at about 114. Now, if you sold when we broke the bull market support band, you would have taken profits at about 110. I was hard headed and only took some, and I should have taken a lot more profit. Now, this brings me to why it's so important to understand market cycles and moving averages with Bitcoin. Okay. Now, what I would want to do is I'm going to go on the monthly chart and we're going to zoom out so you can get a clear picture of what I'm talking about. Now, right now, you're looking at three separate Bitcoin cycles on the chart, all at the same time. Let's see if we can widen this out a little bit. Well, not really, a little bit. Maybe here. There we go. Now you can see market cycle, the three cycles ago here, or two cycles ago here. One cycle will go here, and one cycle will go here. Now, each cycle, we kind of had the same process. We break the bull market, we break the 50 week, we break the 100, we break the 200. Towards the end of the bear market year, this year, 2026, we tap into the 200 week. Now, once we get back above and the 200 week becomes support, the bull markets is on again. The bear market is over. And I can show you right now. We go back and we look at last cycle. When did we end? Hold on. I can't do it all. I got to go back to the weekly. Sorry. Or the moving averages aren't right. Oops. All right. Right here. We're looking at last market cycle. Okay. Prior cycle low, 200-week moving average. When did the bull run start? We break back above the 200-week right here. Go back another cycle. What do you see? We tap the 200-week, bull market starts. We go now. We're getting kind of close to that 200-week. To be honest, it's kind of weird. It's almost like the bear market this time is moving faster and faster and faster and faster. But it also, we're not having as big a recoveries either. Okay. So how can you use this? You can follow the bull market support band. Whenever we're above it, it's a bull market. When we're below it, it's not. Now, during a bull market, we will break below it a time or two, maybe even tap into the 50, but we correct really quickly. Or excuse me, we rebound really quickly. What's interesting though is every single time we break with volume below the 50, we then break below the 100. And if we break below the 100 with volume, we make our way all the way down to the 200. Now, we could have a recovery bounce, right? We could go back up to somewhere here in the 80K region and still go back down and touch that 200 week. Maybe the bottom is a double tap, a triple tap into the 50s. Maybe we go as low as 41K. I have them marked on my chart. It hits into the wick here, 49K. And then I marked it here, a little bit level of support, as you can see. So I'm eyeing anywhere between 38K to 51K as the bottom of the barrel. Of course, I'm not a financial advisor and I can't tell the future. Those are just my own personal analyses and feelings on the market. Again, none of this is financial advice. I'm not a financial advisor. Now, let's take a look at regular Bitcoin chart. Zoomed in. We're going to go back to the daily. And you can see we need to get back up here, mid to upper 80s. This region is where we had support before we lost it. I do not think that's coming back until we get back above this moving average right here. Now, the next thing I want to talk about is the deleveraging event that occurred. Now, if you take a look at the liquidation heat maps on the 7-day, you can see this huge liquidity cluster sitting between 71 and 72K. I believe we'll eventually come up and grab this liquidity. Might even be an excellent short opportunity. I don't know yet. Now, if you take a look at the monthly chart, you can't see it quite as much, but you still have this massive liquidity region sitting around, it's a little bit higher, around 76. So we could make it, it'd be nice if we made it all the way back there for a little bit. But if you look, short leverage has kind of been wiped out. Now, if I go onto a shorter time frame like the daily, you can see that leverage is much, much, much smaller. And over the last 48 hours, we literally had $397 million in liquidations. Open interest dropped $3 billion from 19 billion to 16 billion. Close the door. And open interest dropped from and funding went neutral to slightly negative. But look, this is not, this is painful. I understand that. Many people have been liquidated over the last month or two. But deleveraging is healthy for markets. It's painful, but it's healthy. This is not a 2021 euphoria style collapse. This is the leverage, the players in the market who've always been here. It's being wrung out of the system. And look, this is necessary before we can go on a sustainable upside. So This is where I think it gets really interesting. And I want to take a look at the fear and greed index real quick. Hold on. Here we go. Right now, we're looking at CoinGlass's crypto fear and greed index. I love CoinGlass and I use it a lot for research. As you can see, we're sitting at 12, which is an extreme fear. The crypto fear and greed index is an excellent tool to get a gauge of bullish and bearishness in the market. I think it's a much better indicator to look at to know when to buy than when to sell because, and I'll explain in just a minute. But the fear and greed is an excellent indicator just because crypto markets run on emotion. And when prices rise, greed takes over. And when prices drop, fear takes over. So if you buy when fear is in extreme fear, you bought Bitcoin at pretty cheap prices, right? Extreme fear. Let's see. You bought at 26, 25, 57, 60, 57, 86, 83, 20s, I don't know, 24, 30, 25. It's crazy, right? The fear and greed index will let you know when price is low. But if you take a look, we can get irrational and get up into this red range above 75 into heavy greedy regions and stay there for long periods of time. So if you use it as a sell indicator, many times you'll sell a little too early. Doesn't mean it's not useful, right? It does not mean it's not useful. But right now, and I want to show this, I think it's really important to know. How many days in Bitcoin's life has we been in extreme fear? Only around 11%. How many days have we been in greed? 25. How about extreme greed when like blow off top? Less than or pretty much 5%. Please be aware of that because that's something you can actually use to your advantage if you know. So, retail right now, extreme fear. But this is where it gets interesting. Institutions like BlackRock, they're building. BlackRock just tapped into Uniswap and they are going to trade its $2.1 billion build RWA fund on chain through Uniswap. That's kind of crazy. That's massive. That's an institutional validation of the DeFi space. And at the same time of this, we had Standard Charter partnering with B2C2, and they're going to expand institutional liquidity access. What's the translation? If retail's panicking and infrastructure's being built by big names, liquidity rails are expanding, which is good for crypto in the long term. But that doesn't mean we're going to have short term volatility. That does not mean it's not a bear market, right? But it shows us that big money's building. And I believe that's important. But there is market fatigue right now, right? Number one, Arkham Intelligence. We love to use their blockchain analytics, but Arkham has just shut down its exchange. Why? Low volume. Look, it's $620,000 a day. It's not healthy. They're shutting down. That's a liquidity contraction. Look, the White House itself, during their stablecoin meeting, that ended without agreement. If you take a look here, banker adversaries did not like and did not want that latest deal in crypto. And it all has to do with stablecoin yields. The White House had instructed crypto executives and bankers to come to some kind of compromise, but bankers are still maintaining their call for a 100% complete ban on stablecoin yield. Why? Because stablecoins are offering a better service than them, and they're afraid people are going to move their assets out of banks. Just something to think about. This is going to affect the market negatively, or big players are going to use it to their advantage. So, on one side of the equation, we have professionalization of crypto. Think BlackRock. But on the other side, You have fatigue and thinning liquidity. This tension is defining our market right now. And we very much need to be very aware of this. Now, why the downtrend? Maybe China, maybe China's extension and additions to the crypto ban, which now includes stablecoins and tokenized assets, has negatively affected the market over the last few months. Maybe not. No, news is good to keep up with, but I would never ever trade the news. That's not something that I do. I know others that do. I trade only the charts, but I do keep up with the news because I think we need to stay informed. But look, that's the social studies teacher in me, right? History, economics, current events. It's important. But let's take a look at stock company. Now, a New York stock company has been dumping millions of Bitcoin to repay a Bitcoin backed loan. This is Kango, and they're actually pivoting into AI. We are fearful, or much of retail, much of institutions are fearful that the deleverage event that was caused by Binance on October 10th, that not all the chips have fallen down yet, that there may be illiquid or insolvent companies, crypto exchanges, protocols out there that we don't know yet. Some of them are starting to pivot into new things like AI, and just something to be aware of. Now, so we're going to take a look at a few altcoins at this point of the stream. First, I wanted to take a look at ETH. Now, ETH is trading right now around $1,959. We got to try to get back above that $2,000 range, but I'm not going to be bullish until we get back above $2,100. I have it marked on my chart right here. ETH has just looked abysmal since it peaked out 4,900, let's say. We need to see ETH get back above the bull market support band. Until it does, alts are going to bleed. Now, if we do have a market rally bounce, which I do believe we will before we touch the 200, you can see that if the bounce happens, ETH will probably outperform Bitcoin, in my humble opinion. Now, right now, it does not look that way. If we take a look at the Ethereum Bitcoin chart, we have broken back into the downtrend range. And it looks like, I mean, we've kind of made a little bit of support right here. What is that? At 0.029, but we're probably going lower. But if we get a bounce and we get back above here, I could easily see this getting back up to 0.031. And when that happens, alts will run. Okay. Temporarily. I'll be looking for shorts. I'll be taking a little bit more profit on some things. That's how I'm playing it. Now, let's take a look at a few more charts before we get off here. First one I wanted to look at is Solana because it's one of the biggest altcoins out there. Okay. Now, Solana has broken below $117 and now $110. And today, or about 4 days ago, we broke below $79, tapping into 69. Now, right now, we're sitting right at about 79. Maybe we'll get lucky and form a base right here around 79.80K. Maybe not. I mean, I do have it marked on my chart, and we are back above it right now, but we are heavily below the bull market support band, the 50, the 100, and the 200-week moving averages. Even if we look on the weekly, look at this. We're below the 200. Now, I can show you a million coin charts and they all look like this. We're going to now take a look at Sway. Now, I'm probably going to get back into this one, possibly. I'm waiting to see. I think we're going to bleed out more. I think we'll get all the way back down here, which is literally 56 cents. So I'm not buying yet. We broke below my last line of support, which was 109, and we're going down unless we get some kind of rebound. You can see that I said we could go and bounce. We did not, and we are now going down. So this one, not looking bullish, but that's only in the short to the midterm. We are in a bear market. Next, I wanted to take a look at Tau. On the daily, Tau's below all moving averages. Volume has been low. If I were to put volume on the chart, And Tau has broken below $152. That's not good. It is now below the low. Not good. I am still bullish on the Tau ecosystem, but as of right now, I am not accumulating until I get some more clarity here. Next one I want to look at is Zora. As you can see on the Zora chart, we have broken the 1.6 fib. We're breaking below the 0.019 level, and we're probably going to tap into the 0.26 fib, which literally, right, that's 0.014. And if we do that, trader coins are going to look terrible. All right. The next one I wanted to look at is Arrow. Now, Arrow is actually getting into my buy range. Now, it could still go lower. We could go all the way back down to the bottom, 12 cents, but I think anything between 12 and 30 cents might be an excellent time to accumulate Arrow. Just like all the other altcoins, it's below the bull market support band, all the moving averages, and volume has been slightly down. But I'm still bullish on Arrow. I'm actually waiting to buy into some locked Arrow on the open market, but I think we might even go lower, but it's starting to look a little bit juicy to me. I'm very bullish on Aerodrome. It is the liquidity hub of the base network, and I am bullish on what they're building. Now, there are many other charts I could pull up. They all look the same. Ondo, back at the all-time low. Broken all the moving averages, not looking good. That doesn't mean Ondo's not going to perform. I mean, BlackRock, many institutions, big on RWAs, but not right now. Okay, not right now. Now, for this last part, I want to kind of summarize everything we talked about. Okay. So, my core thesis is we are not in a collapse, not a structural one. We're in a deleveraging. It's still a bear market. It's not a collapse, but it's also not the moon. It's a reset. As long as 63K holds, we're getting close to having a bounce, in my opinion. The pain trade right here is high, especially if it fails. We will end up testing the bottom of that range, which is sitting around 58K. Either way, it's not an environment for emotional trading. This is just where we are. Right now, you need to be reducing your leverage, protecting your capital, you study structure, and you prepare for the next bull phase. Now, right now, I'm not chasing AI pumps. I'm letting that big tech FUD settle. And we're watching those weekly closes. Where is Bitcoin closing on the weekly? You watch the liquidity, watch the funding rates. Is it going positive again? Look, we're in a bear market. Markets reward patience. Those of you all that are listening and locked in right now, you are the ones who will benefit next bull. Markets reward patience, not aggression during uncertainty. So now I want your take, guys. Do you believe that 63K is the demand wall? Or do you think we're going to flush down to the 200-week moving average? Drop it in the comments. Let me know. And if you want daily structural breakdowns and live trade updates, all the links are in the description. Check out the free Telegram group, dadsdefispace.org. Go follow us over on Zora, Farcaster, and Base. Check out our trading links by joining up and signing up with Layer Bank, 15% off your trading fees, or Blowfin. That gives you free membership into my premium group where you can see all my trades, DeFi plays before I talk about them on YouTube. If something like that interests you, please check that out. Shoot me a DM on Telegram, DadDeFi1013, and follow us on X at CryptoZone1013. And please, guys, don't go full degen. Trade smart. Go touch some grass. And I'll see you on the next video. Peace, guys.